One Nation, they proposed a government-backed home loan with a fixed rate for the full 30-year term. This would be extremely unusual for Australia, but it's much closer to the system already available in America. The real difference here isn't just fixed versus variable rate. It's about who carries the risk. Australian banks fund mortgages using deposits and wholesale borrowing, and those funding costs can change over time. At the moment, because most home loans are variable, banks can pass on increased funding costs really quickly. We see this through the somewhat constant fluctuation in variable rates, and we also see it when the RBA raises or decreases rates and the banks are able to pass that on almost instantly. This helps banks' margins and makes the banking system easier to manage. But the downside in Australia is that the household budget becomes the shock absorber. So your mortgage might run for 30 years, but at the moment you have no certainty about the cost of that mortgage over the 30-year period. And as we've seen recently, things can go up and down really quickly. So in America, this is handled differently. Many mortgages after they're created are packaged into securities, and those securities are then sold into a huge market where pension funds, insurers, and other banks can buy them. This moves a lot of the interest rate risk away from homeowners and instead toward investors in the financial system. But the premium paid is that the cost of refinance is generally more expensive, and it also disincentivizes people from moving. But it raises an interesting question. Could fixing someone's largest household expense for a 30-year period give people more freedom to take productive risks? That means potentially changing careers, starting a business, working reduced hours, investing in their education, or even just leaving a secure job knowing that your mortgage isn't going to materially jump. In Australia, fluctuating housing costs make having a stable job more valuable because households are carrying so much of the interest rate risk. So from that perspective, having a 30-year mortgage isn't just about cheaper repayment. It could give people greater financial confidence and the mental freedom to be more entrepreneurial. So the question then becomes whether One Nation's proposed 5% fixed rate could be funded fairly and sustainably without the Australian taxpayer having to absorb the cost.